All right, so I feel like this video is really overdue. There's a ton of hype around how to build wealth, how to build wealth, how to build wealth. In today's world, in this changing economy and the changing circumstances around us, what was working, maybe even a decade or 2 decades ago, even as recent as that, has changed. And as a financial professional, not just a successful YouTuber or content creator, as I always say, I'm actually a financial professional working in the banking industry and in the financial services industry. I have a unique perspective on this, and I want to deliver it to you guys because I want to actually tell you 4 founding pillars that you need to start actually building wealth in this system. And I want to dive into it straightforward. No clickbait, no selling a course, no salesy anything. I want to give you the raw and cut truth. It's not about investment strategies. This is about tangible steps you can be taking to put yourself in position to become financially stable and become financially free thereafter. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, the proper use of life insurance, and the ownership of real estate. Like this video, subscribe to the channel. I am uploading content on a daily basis to help you customize your personal blueprint for prosperity. So let's get straight into it. What's the number 1 pillar to building wealth in this system? Having proper identification. One of the biggest focal points for any financial institution that you're going to be doing business with on your way to building your finances up is going to be knowing who they're doing business with and preventing fraud. This is one of the primary focuses for any of these companies, any of these institutions. They're going to want to make sure they know who they're doing business with. And they do that by a series of background checks and cross-referencing. But they're going to expect from you a bare minimum of 2 proper forms of identification, in some cases, maybe even more. And you're going to need government issued IDs that are up to date, not expired. Ideally has your proper name and address on it, and you're going to need secondary IDs. These are typically going to be supporting documents or supporting forms of ID that are not the same as the primary issue. So for instance, a lot of institutions are not going to want to see a driver's license and a state ID. No. They're going to want a driver's license and a passport and a credit card or debit card from another institution, a light bill, utility bill, some other form of reference from another legitimate source that they can cross-reference to further prove that you're likely who you say you are. Having proper identification is number 1 because fraud is one of the number 1 focuses of defense for these financial institutions you're going to need to deal with. Number 2, proper verification. You've identified and claimed who you are now. Now you need to back it up, your whole profile and identity up with proper verification. Now you're starting to talk about W-2s, tax forms. If you're talking about a business, you're going to need Secretary of State. You're going to need EIN confirmation numbers. You're going to need proof of address. This is going to be verifying documents. All right, you say you're this person. You say you make this money. You say you live here. You say your business operates here. Prove it. Proper verification, again, goes right back into number 1. You need to make these institutions feel comfortable on who they're doing business with. Having proper identification and being able to verify that with supporting documentation is essential. Otherwise, they're not going to want to do business with you. Number 3 is where it starts to get good. Being bankable. Having strong banking relationships is crucial. How does this lead out to financial stability? How does this lead out into financial freedom over time? Being bankable. Banks are at the center of just about every financial transaction we have. There are not many financial transactions that are not passing through the bank's hands. So if you're planning on making more money, the vast majority of that money coming in or going out is going to pass through a bank. And you having healthy banking relationships optimizes your money, better access to your money, more efficiency, saves you money, and also perks and benefits when you're maximizing your banking relationship. Because banks are predicated on having strong customers so they can increase their wealth. The more deposits they have, reliable customers they have, the more they're able to cut down on fraud, the more they're able to lend out money, other services and products that make them money, and they share that back with their top clients. The further up the food chain you are in the banking system, the better access to your money, the better service, the more access to quality products, the more access to credit, and the list goes on. Be bankable. Have proper identification, verify yourself, and have very strong banking relationships. This will give you the foundation to jump into any other financial strategy or venture you have in mind, whether that's setting up a business for yourself, investing in real estate, investing in the stock market, investing in cryptos, you name it, any legitimate route you take, having strong banking relationships can do nothing but aid you. Number 4, be lendable. You will notice a pattern. They're in chronological order. Proper identification and proper verification gets you into the banking system. Maximizing your banking relationships gets you access to capital. Once you have access to capital, you can scale in any way you choose. Being lendable means I've properly identified myself, verified myself, proven that I can be proven with my own money and stable. And now at this point in time, the bank is going to start to trust me with their money. I've shown that I have reasonable to great credit. I'm managing my own money well, and I'm now showing the capability of managing the bank's money. When you do this and you can start to do this at scale, the bank lends you more money because you're a reliable return on their investment. The bank is lending you money, basically renting you money. For the bank, money is the product. For you, money is a tool. They lend you capital. You go out and do something responsible that gets you a higher return than that capital is costing you. It's called the delta, the difference between what you earn versus what you pay. So having these 4 in place is a guaranteed way to create financial stability for yourself and to create financial prudence, and being rewarded for that by getting access to capital. Once you have access to capital, at that point in time, you can invest in whatever you want. This is where I recommend you scale a business, increase your income, and find an effective investment strategy. Do these things in that order. This is JP from Blueprint for Prosperity checking out. As always, I want y'all to stay focused, stay in motion. See y'all soon.